You're in the home stretch now, literally. Your inspections are done, your appraisals came back, and you're good, and you're a couple of weeks away from getting the keys to your new home. But this is not the time to relax. The financing finalization phase is where deals can still fall apart if you're not careful. I'm David Karras, and in this video, I'm going to be walking you through the critical final steps before you close. The final loan processing and underwriting, and how to handle last-minute document requests without panicking, when and why to lock your interest rate, and how to conduct a proper final walkthrough so that you don't get stuck with someone else's problem. Now, most buyers think once they're under contract, they've passed the inspections, that they're home free. Then they get blindsided by underwriting conditions, they miss critical issues during the final walkthrough, or they make financial mistakes that tank their loan approval days before closing. Now, you're going to learn exactly what happens during the final loan processing and underwriting, and how to respond to the underwriter's request quickly and correctly. You're going to go over when to lock your rate and why timing matters, and what to check during your final walkthrough, and what to do if you discover problems 24 hours before closing. Now, this phase, it requires attention to detail and quick responses. One missed document or one new purchase on a credit card can derail your entire closing. But if you know what to expect, how to handle it, you're going to be able to cruise to the closing table without a bunch of drama. Now, if you're finding this series helpful, hit that subscribe button and turn on the notifications. The next video is the actual closing day and what happens at the closing table, what documents you're going to have to sign, and how to handle the keys to your new home. So you're almost there. Let's dive in. And once you're under contract, your loan, it moves from pre-approval to final processing. This is where everything gets verified, documented, and scrutinized by the underwriter. Your lender will request a mountain of documentation during this phase. Responding quickly and completely is critical. So during the pre-approval, you have submitted things like your pay stubs, bank statements, W-2s. You've signed a credit report authorization and done an employment verification. But that was maybe weeks or months ago. Now the lender needs updated and additional documentation. The new documents that you're going to need to submit will likely be updated pay stubs. They need the pay stubs because the lender needs to verify the past 30 days of employment. It shows your income and it verifies you are still employed. Now, if you got a raise, that's awesome. Tell your lender. Now, if your income dropped, we might have a problem. Discuss that with your lender immediately. Next will be updated bank statements. The lender is going to need 2 of your most recent months of statements, okay, for all of your accounts. It shows you still have funds for down payment and closing costs, and it shows your financial situation hasn't changed. Now, they must be complete statements, like all pages. If it says 1 through 20, 1 through 20 needs to be there, even if they're blank pages. They must show the account number and your name, and they cannot be screenshots they have to be official statements only. Next is the purchase contract. Now, this should have been provided to them via your real estate agent, but just in case it hasn't, make sure you send it. Send them the fully executed contract. That's the one that's signed by all parties. All right. Now, you want to send all addendums and amendments as well as seller's disclosures. You will need to obtain homeowner's insurance and give a copy of that to the lender. They will need to see that you have proof of insurance. They're going to see the declaration page or binder, and it must show an effective date on or before closing, and it must list the lender as a mortgagee. Next is the title commitment. They need a preliminary title report that shows title is clear or it identifies issues that need to be resolved. Now let's talk about gift letters. Now these may or may not be applicable to you. If you're receiving gift funds for down payments from someone outside of the transaction, they will need a letter from the donor stating things like the amount of the gift, the relationship of them to you, that there is no repayment required. They're going to need the donor's contact information and proof that the gift funds have been transferred, and a bank statement showing that the funds are in your account. Now you may need some explanation letters. So here are some reasons why you may need an explanation letter. You might need it for an unusual deposit over $500 or $1,000, for any credit inquiries, for gaps in employment, for late payments on credit report, or for any changes in your financial situation. I'm going to give you an example of what that might look like. Dear underwriter, regarding the $3,000 deposit on January 1st, 2026, this was a gift from my mother. Her name is this, and it's a gift for my home purchase. I've attached a signed gift letter and proof of transfer. Now, these funds are not a loan, and I do not need to repay them. Sincerely, and then your name. Something simple like that, okay? The lender will need to obtain an employment verification as well. They'll verify your employment the day before you close as well, so don't quit your job. Now, the lenders will try to obtain verbal verification of employment. That's where the lender will call your employer. Sometimes written verification is required. They do this to confirm that you are still employed, and it confirms your salary hasn't changed. Now, let's talk about self-employment documentation. That's a whole nother level of paperwork there. If you're self-employed, additional documents that will be required include business tax returns for 2 years, profit loss statements, business bank statements, a CPA letter verifying income, and they might even want to see your business license. Now, if you have additional property documentation, may be needed. These include HOA documents such as budgets, bylaws, and codes, covenants, and restrictions, a condo questionnaire if you're buying a condo, a rental income verification if property has a rental unit in it. Now, let's talk about how to submit these documents. The easiest way and the most common way is using a lender's online portal. Okay? Most lenders will have a secure upload portal for you to upload documents directly. It's faster than mail or email or fax. Yeah. So you could email them. Some lenders do accept documents via secure email. If they do, follow their instructions to ensure that they are received correctly by them. You can still fax. Yep, it's still a thing. Some lenders still use faxes for certain documents. So if they do that, make sure you use a secure fax service or e-fax. Like FedEx and UPS stores, they still have fax machines there. There is always in person. If you drop them off in person to the lender's office, that's cool, but make sure you get a receipt for those items. Have them make a copy for you. Here are some tips for submitting the documents. Respond immediately. When a lender requests documents, it's not a request that you don't have to provide. You do have to provide it. So provide it within 24 to 48 hours. Delays in providing them documents, they're going to delay your closing. Make sure you submit complete documents. Don't send a partial statement or missing pages. Lenders are just going to ask for it again, and that's just wasting time. I find it helpful to label everything. Name the files clearly, like John Smith pay stubs, January 2026. It makes it easier for the lender to organize them, and you too. Keep copies of everything that you submit. You may need to reference them. If you're scanning documents, use clear, readable scans. Ensure that all text is legible. Never edit, white out, or alter a document at all. This is fraud, or can be considered fraud, and it could kill your loan. After submitting, confirm with the lender that they received them and ask if anything else is needed. So let's talk about what happens if you don't submit documents promptly. Well, your closing date is going to get pushed back. The seller may get frustrated. You may lose your rate lock. Okay, there's several things. If you miss critical deadlines, the lender may deny the loan altogether, and then you lose the house and your earnest money if it's past any contingency period. Now, last minute scrambling, it can be stressful and it can be avoidable. Here's the bottom line. Document submission is tedious, but it's critical. Treat it like a job. Respond quickly, submit complete documents, and stay in close communication with your lender. Let's talk about underwriting. Okay, underwriting is where a trained professional reviews your loan application and all the supporting documents to determine if you qualify for the loan. Now, they can seem like the most hateful people, but they're just doing their job. This is the most stressful part for many home buyers. So what is underwriting? The underwriter is the lender's gatekeeper. They verify your income, your assets, your employment, and your credit. They assess your ability to repay the loan. They evaluate the property as collateral, and they ensure that the loan meets lender guidelines and regulations. They approve, deny, or request additional information. Think of the underwriter as a detective. Their job is to find any inconsistencies, red flags, or risks. The underwriting timeline, it can vary, but if you submit your documents timely, the initial review can take 1 to 3 days. Then the underwriter reviews your file. If there's issues in the initial findings, right, and they're going to look for that, okay? The conditional approval is the most common. The underwriter approves your loan subject to conditions. You must satisfy all conditions before the final loan approval. Conditions could be things like provide additional documentation, explain unusual activity, pay off certain debts, provide updated documents. Satisfying conditions, once you get those done, it can take another 3 to 7 days for them to do their review. Now, you provide requested documents, then the underwriter reviews it. They may issue an additional conditions. Yeah, it can get frustrating. Once all conditions are satisfied, though, the loan is approved and you get the clear to close. Once you get this, you can schedule the closing. Credit can impact things, and you may need an explanation of credit inquiries if something happens. Things like, did you apply for new credit? Even if you didn't open new accounts, inquiries must be explained. Here's a pro tip. Don't do anything with opening or closing anything involving your credit without talking to your lender first. It could cause your debt to income ratio to change and affect your ability to buy your house. If you did anything, your letter could look like this, okay? I was shopping for auto insurance and the agent ran my credit without knowledge. I did not apply for credit. Okay, something simple and explains why there is a credit inquiry. Now let's talk about debt payoff. The underwriter may require you to pay off certain debts to improve your debt to income ratio. You must provide proof that that item has been paid off. Now you can't have them paid off at closing. Just talk to the title and lender about that. Underwriting may feel invasive and frustrating, and there is a reason why. The underwriters, they question everything. Large deposit, explain it. Small withdrawal, explain it. Sold a car, prove it. Credit inquiry, explain it. Very, very tedious and invasive. It feels like they don't trust you, but they're doing their job. They're protecting the lender from fraud and risk. Now, underwriters, they usually ask for documents that you've already submitted. And sometimes they lose them, and sometimes they need updated versions, and sometimes they need a different format. Roll with the punches. It's annoying, but just resubmit it. Sometimes underwriters issue conditions, then more conditions. Let's say you satisfy 5 conditions and they issue 3 more based on the 5 that you satisfied. It can feel endless. This is normal. Keep responding. Stay focused on your goal of buying that home. Now, here are some tips on how to stay flexible and avoid losing your mind. First, just expect the unexpected. We call it Semper Gumby, right? Just stay flexible and loose. Underwriting always requests additional documents. Plan for it mentally. Don't panic when it happens. It's just par for the course. Respond to the request within 24 hours. Fast response equals faster closing. Slow response equals delayed closing. Your lender will give you deadlines. Make sure you meet them. They're not just coming up with arbitrary dates. Now keep your lender and your agent informed. If you can't provide something, tell them immediately. Don't go silent. Maybe they can help you find a solution. Next thing, don't take anything personally. Underwriters aren't trying to ruin your life. They're following strict guidelines. They're trying to stay professional, and they're trying to be cooperative. Make sure you are honest. Don't lie or hide anything. The underwriters, they will find out. Honesty speeds up the process. Another thing, have your documents ready. Keep digital copies of all financial documents. When the underwriter asks for that, you can submit it immediately. On my computer, I just put a folder with a house name on there, and I just throw everything right into it. That will help you stay organized, right? So creating that folder, either digital or physical, with all the documents, it's going to be an easy reference for you to resubmit. Now let's talk about job change. You change jobs after applying for the loan. Even if it's a better job with higher pay, it's a red flag. Lenders want 2 years of stable employment history. If you quit your job and go into the same field, they might be able to work with that. But if you quit your job, like let's say you quit teaching and become an insurance agent based off of commission from salary, you just lost your house. Now let's talk about cosigner issues. If your cosigner has credit or income issues, this affects the entire loan. The solution? Vet your cosigner carefully before applying, even if they are your spouse. Okay, let's go over what can kill your loan during the underwriting process. We already talked about job loss, right? If you lose your job, your loan will be denied. No expectation or no exceptions, right? Theoretically. If you have new debt, like buying a car, opening credit cards, financing furniture, co-signing a loan for your brother to buy a car, right? Things like that. These things can increase your debt to income ratio, and it can push you over the limit. Now, your lender will pull your credit again before closing and will discover any of these changes. So make sure anytime you do anything with your credit, you talk to your lender first. So what about major credit score drops? Well, late payments, maxing out your credit cards, and collections added to it can reduce your credit score. These things can drop your score below the minimum of your loan type. This is why you don't want to close any accounts during this phase without talking to your lender first. Now let's talk about larger unexplained withdrawals. If you can't explain where money went, the underwriter may not count your remaining funds. Let's talk about appraisal issues. If the home doesn't appraise, the home has an FHA or VA required repair that wasn't completed, or the property doesn't meet lender standards. Okay? If you have a change in income, let's say your salary got cut, let's say you switched to commission-based pay, let's say you lost overtime or bonus income that you usually had. If there are property issues, title problems discovered, properties in a flood zone and you don't have the proper insurance, the HOA is not an FHA or VA approved HOA if applicable, fraud discovery, if you lied on the application or you falsified documents or hid debt or obligations, that's a no-go. This results in immediate denial and potential legal consequences. So how long does the total underwriting process take? Well, really, it depends on you and how fast you provide documents. But the initial underwriting, 1 to 3 days. Conditional approval, 3 to 7 days to satisfy conditions. Your final approval, the clear to close, 1 to 2 days after that, after all the conditions have been satisfied. So a total of between 7 and 14 days typically. But this assumes you respond to conditions quickly. There's no crazy holidays or things like that in there. But if you are slow to respond, the underwriters can take weeks. Now let's talk about the clear to close moment. This is where you have been waiting for. When your lender says you're clear to close, it means that all underwriting conditions are satisfied. That's awesome, right? The loan is fully approved and you can schedule your closing date now. You can breathe, maybe a little bit. But even after clear to close, don't make any financial changes. The lenders are going to verify your employment. They're going to pull a credit one final time right before closing. Some do it the day of closing. Now, the bottom line is this. When it comes to underwriting is stressful. It's invasive. It's frustrating. But it's necessary. Stay flexible, respond quickly, don't take it personally, and whatever you do, don't make any major financial changes until after you close. Now, let's talk about locking in your rate. Your interest rate isn't locked automatically when you apply for a loan. You need it to actively lock it, and the timing of that matters. You may be wondering, what is a rate lock? And that's a great question. A rate lock is a guarantee from your lender that your interest rate won't change between now and closing, even if the market rates go up. So here's how it works. You and your lender agree to lock your rate for a specific period. Typically, they lock them for 30, 45, or 60 days. Okay, those are usually the lock guarantees. Now, the lock guarantees that the interest rate points in or lender fees, they won't change when you lock them. So when should you lock your rate? This is the $1 million question. Lock too early and you might miss a rate drop. Lock too late and the rates might go up. Option number 1. Lock when you go under contract. This is the most common. Once your offer is accepted and you have a closing date, lock your rate. Why? Well, you know your closing timeline. You can match your lock period to your closing date. You have certainty and can plan your budget. Now, who is this best for? A rate lock like that is best for buyers who value certainty over trying to time the market. They prefer stable or rising rate environments. Okay. Now, option number 2, float and watch rates. Don't lock immediately. Monitor the rates and lock when they drop or when you're close to closing. Why would you do this? If rates are dropping, you might get a better rate. If rates are volatile, you can wait for a good day. Here's the risk with doing that though. Rates could go up. You could end up with a worse rate than you could have if you locked it. It can be stressful to watch the rates daily. But who is this best for? It's best for buyers who are comfortable with risk. They're comfortable with falling rate environments, buyers with flexible closing timelines. Now, option number 3, lock with a float down option. You can lock your rate but pay a fee, typically 1/4 to 0.5% of the loan amount, for the option to float down to a lower rate if the rate drops significantly before closing. Here's an example. You lock in at 6.5%. You pay $1,000 for float down option. The rates drop down to 6% before closing. You get to lock in at 6%. Why would somebody do this? Well, it protects you from rate increases, but it lets you benefit if the rates drop significantly. There are usually some conditions. Usually rates must drop at least 1/4 to 0.5% to qualify, and you may have a time restriction, and there's costs. It costs extra upfront. Now, this is best for buyers who want protection but also want to benefit from rate drops, volatile rate environments as well. So how long should you lock for? Match your rate lock period to your expected closing date plus a buffer. If you have an expected closing within 30 days, lock for 45 days. It gives you a 15-day buffer for some delays. If you're expected closing in 45 days, lock for 60 days because it gives you that 15-day buffer. Well, why would you need a buffer? Well, there's so many reasons why. Your closing gets delayed due to inspections. You have appraisal issues. There's title issues. You have lender delays. You don't give the paperwork to the underwriter in time. If your lock expires before closing, you have to relock at current market rates, which could be higher, or pay an extension fee. Let's talk about rate lock periods and cost. Shorter locks equal lower cost, better rate. 30-day locks, lowest rate. 45-day lock, slightly higher rate at 0.125% higher typically. A 60-day lock, higher rate, about 1/4% higher typically. Lenders charge more for longer locks because they are taking on more of a risk of rate changes. Well, let's talk about extension fees. If your lock expires and you haven't closed, you need an extension. These extensions cost typically 0.125 to 1/4% per 15-day extension, and so it can get expensive. So if you got a $400,000 loan, you need a 15-day extension at 0.125%, that's $500. What if rates drop after you lock? If you locked at 6.5% and rates drop to 6%, without that float down option, you're kind of stuck at 6.5%. That's the price of certainty. With that float down option, you can lock at 6%. Okay, if you paid for this option and you meet the conditions required for that. Can you break your lock? Well, usually no. A rate lock is a binding agreement. But in rare cases, if you cancel the loan and walk away, you lose the house, right? If closing is delayed significantly and you reapply, don't count on this, right? Treat a lock as final though. Let's talk about rate lock confirmation. After you lock, your lender provides a rate lock confirmation document showing the locked interest rate, the locked points, if any, if you had to pay for them, and the locked expiration date, and then it'll have all the loan details. Review this carefully and keep it for your records. Let's talk about factors that affect your rate even when it's locked. Your rate is locked, but certain changes can still affect your rate. Let's say your credit score drops. If your credit score drops significantly, your lock rate may no longer be available. Lender reprices your loan at a higher rate. Let's talk about changes to your loan amount. If your loan amount changes, such as a different purchase price, different down payment, those kind of things, your rate may change. Let's talk about changes to loan type. Let's say you switch from conventional to FHA or changing loan programs, right? That voids your lock. If you change which property you're buying, the lock is void. So switching from a primary residence to an investment property, that will change your rate. So here's the bottom line on locking your rate. Lock your rate when you go under contract. Lock for 45 to 60 days to give yourself a buffer time. Don't try to time the market unless you're comfortable with risk. Get rate lock confirmation in writing and don't make any changes that would void your lock. Now, once you're locked, don't make any changes to your finances, okay, that would affect your credit score or your debt to income ratio. The next topic we're going to discuss is the final walkthrough. We're almost there. The final walkthrough is your last chance to verify the property is in the condition that you agreed to buy it in. This typically happens 24 to 48 hours before closing. Don't skip this. And I highly recommend do it about 3 or 4 hours before closing. Now let's talk about what to check for during the final walkthrough. The final walkthrough isn't a second inspection. It is a verification that nothing has changed since you went under contract. Well, let's talk about what you're going to be checking for. You're going to check to make sure that the home is in the same condition or better than when you last were there. You're going to be making sure that there's no new damage has occurred, that everything is as it was when you made your offer. All agreed repairs were completed, right? If the seller agreed to fix the roof leak, verify it was fixed. If the seller agreed to replace the HVAC, verify that was done. Everything that should stay has stayed, right? If you have negotiated different appliances included in the sale, make sure they're present. You want to make sure that the light fixtures that were included are present. Window treatments, if they were included, were present. You also want to make sure that if it should be gone, that it's gone. You want to make sure that the seller has moved out, unless you have a lease back. Now, sellers' personal belongings, you want to make sure that they're all removed. The home, it should be broom swept clean, which means reasonably clean, debris removed, not fully detailed unless you ask for that. You want to make sure that all systems are functional. Test everything, lights, faucets, appliances, HVAC, garage door. Verify nothing has broken since your last visit. Now here's a detailed final walkthrough checklist. Now with regard to the exterior, you want to walk all the way around the perimeter. You want to check for new damage, broken windows, right? Damaged siding, roof damage. You want to verify that landscaping hasn't been destroyed. You want to check the driveway and walkways for any new cracks or damages. Test that garage door opener. Make sure the clicker works. Make sure the inside button works. When going through the interior, go room by room. Turn on all the lights, all the ceiling fans. Test all the outlets, right? You can bring your phone charger and just plug your phone charger into them. Open and close all the windows. Check the walls and ceilings for new damage. Verify the agreed upon fixtures are present, such as chandeliers, ceiling fans, TV mounts. You want to test all the appliances. The refrigerator, is it running and is it running cold? Check the stove and oven. Turn on the burners. Make sure it works. Turn the dishwasher on for a short cycle. Microwave. Hit something for like 30 seconds. Garbage disposal. Turn it on. Run all faucets, hot and cold. Check under the sink for leaks. Open all cabinets and drawers to verify that they are empty. Now, with regards to the bathrooms, flush all the toilets. Run all the faucets, hot and cold. Test the shower and the tub. Check for leaks under the sink. Test bathroom fan. Check the tile and grout for any new cracks or damage. Turn on all the lights. Test all outlets. Open and close all windows. Check closets. Okay, they should be empty. Test the ceiling fans. Check for water intrusion, right? Especially if you have a basement. Verify sump pump is working if they have one. Check for new damage, using test lights. Turn on the heat and the AC to verify it's working. Check the thermostat functionality. Listen for unusual sounds. Verify the water heater is working. Check for leaks and know the age. Make sure that it matches the inspection. Verify all breakers are labeled. There's no signs of damage or erosion on the electrical panels. Run water in every sink, shower, and tub. Flush every toilet. Check under the sinks for leaks. Run dishwasher and check for leaks. I'm reiterating that because it's important. Test all door locks, exterior and interior. Test deadbolts. Ensure you can lock and unlock everything. Verify that all keys work. All right. Again, test that garage door opener. Open and close all windows. Verify they lock. Check for screens. Make sure they're there. Look for damage. Now here's some other items, right? The TV mounts if they were included. Shelving if that was included. Anything else specific in the contract that you negotiated to be there or you purchased as part of the contract. What should be removed? Well, verify it's gone. Make sure the home is broom swept clean, not spotless, but reasonably clean. No trash or debris, no major cleaning required. Make sure you document everything. Take photos as evidence of conditions, especially if something is missing or damaged. Do a video walkthrough showing everything is working. This is great documentation if something comes up. Take notes. Okay, write it down on a piece of paper, text it to yourself, but write down anything that's not right. Note the room and the specific issue. Here are some items that you might want to bring to your final walkthrough. A copy of your purchase contract so you can reference what was included and what was agreed upon. Bring a repair addendum, or that way it lists all the repairs that the seller agreed to complete and verify each one was done. Bring the inspection report. Okay, you can reference it if needed. If you thought something was not broken but it ended up broken, check the report. Bring your phone or a camera for photos and videos. Bring a flashlight for any dark areas like a basement or crawl space or an attic. If you want to measure anything, bring a tape measure. That way you can measure it if needed. Bring a notepad and pen to document any issues if you're more analog than using your phone to document that. Your agent, they should attend with you, right? How else are you going to get in there? So you have your agent there, okay? Now let's talk about who should be there at the final walkthrough. You, right? Your spouse or significant other, if applicable. Your real estate agent. Your inspector can be there. It's optional, but it's helpful for checking repairs, but it's not going to be free. What not to bring, right? Kids, they're too distracting. They want to run around, pick rooms, whatever. Don't bring extended family, right? Don't bring your friends. They're all unnecessary. We got to keep it professional and focused. So let's talk about how long it should take. If you're buying a house that's small, like 1,500 square foot or smaller, you plan a half an hour, 45 minutes. 1,500 to 3,000, plan 45 to 90 minutes. And if it's larger than 3,000 square foot, plan 90 minutes to 120 minutes. Don't rush. This is your last chance to verify everything before you own it. What if the seller is still present? Well, let's say the seller hasn't moved out yet because there's a rent back situation or they haven't finished moving all their items out. You can still do the walkthrough. Just focus on what you can verify. Now, here are some common issues that are found during the final walkthrough. Maybe the seller took fixtures or appliances that should have stayed. Maybe repairs weren't completed. Maybe repairs were done, but they were done poorly. There could be new damage that has occurred. Maybe the seller broke something while moving out. The home could be filthy, like beyond broom clean. Utilities have been shut off, so you can't test systems. Seller hasn't moved out, but was supposed to. Now I'm going to cover how to handle these issues in a minute. One of the most common final walkthrough issues is stuff is missing that should be there, or stuff is still there that should be gone. Unless you are doing a lease back, the seller should be pretty much completely moved out. Until money changes hand, the house is still technically theirs though. Do not close until the seller has vacated. Document the situation. Work with your agent to delay closing or negotiate a solution if needed. Now let's talk about what to do if a problem arises during the final walkthrough. Let's say you found an issue during the final walkthrough. Don't panic, but don't ignore it either. Here's how to handle it. Okay, let's discuss some of the typical types of problems. Okay, let's talk about minor issues. Minor issues are things like light bulbs missing, small amount of trash left behind, one window blind may be damaged or missing. Seller might have left a few items in the garage. These are annoying, but usually easily resolved. Let's talk about moderate issues like agreed upon repairs not completed, repairs completed but done poorly. Maybe the home is not broom clean, it's kind of dirty. Appliances that should stay are missing, or the seller left significant junk behind. These need to be addressed, but usually won't delay closing because it's easy to kind of take care of. Major issues like significant new damage, like a broken window, a hole in the wall, a flooded basement, major repairs not completed, the home's not vacant, the seller hasn't moved out. There could be a major appliances missing that were included in the sale of the house, or maybe they're not functioning. These may require delay in closing. So what do you do if you find a problem? The first thing I gotta tell you is to document everything. Take photos from multiple angles, close-ups of the damage or issue. Take wide shots showing everything in context, okay? Take video, walk through showing the issues and narrate what's wrong. Take notes, write down specific issues. Note location and severity. Time and date stamp your documentation. Your agent will verify the issue. They'll advise you on the next steps, and then they'll contact the listing agent and help come up with to determine the severity and a resolution, right? Ask yourself this: is this a minor inconvenience or a major problem? Does this violate the contract? Can this easily be resolved? Or is this something you can live with, or does it have to be fixed? Your agent will help you assess this. Now, whether this is worth delaying closing over or not, that's a different story. Maybe this is something that the seller can fix quickly. Okay? Another thing to think about is whether you should negotiate a credit instead. Next is your agent will contact the listing agent and notify them of the issue, and they'll provide documentation that you've given them or they've taken themselves, and they'll request that resolution. So how do you determine resolution options? I'm going to give you about 5 different options here. Option 1, seller fixes the issue before closing. That's best for repairs not completed, items that should stay but are missing, or new damage caused by the seller. Now here's how that process would look. The seller completes the repairs or replaces missing items. You then would conduct another walkthrough, and you're going to verify this. All right, if everything works, then the closing proceeds once all the issues are resolved. This may delay closing by a couple of days, depending on how complex the issue may be. Option number 2, the seller provides a credit at closing. This is best for issues that you're willing to fix yourself. It's good for when you want control over the repairs, and when delaying closing isn't feasible. You negotiate a credit amount. Get estimates if needed. The seller can provide a credit at closing, and then you handle the issue after closing. For example, let's say a chandelier is missing that was valued at $500. Okay, the seller provides $500 credit at closing, and then you go buy a chandelier after moving in. Now let's talk about option number 3, an escrow holdback. This is best for repairs that can't be completed before closing and when you need assurance that the seller will follow through. Everyone has to agree on the cost to fix the issue, and then they hold that amount in an escrow account at closing, typically 1.5 times the estimated cost. The seller completes the repairs after closing, and then the funds are released to the seller once repairs are verified and approved. If the seller doesn't complete the repairs, you can use the escrowed funds to hire someone. Now keep in mind, not all lenders will allow escrow holdbacks. Option number 4, you can reduce the purchase price. This is best for significant issues and when you want the issues reflected in the price you paid. Now you will negotiate a reduction in purchase price, then you got to sign the amendment to the contract and then close at the new price, and then you handle the repairs after closing. This could take a while because the lender and title will have to redo all the numbers. Now let's talk about number 5, delay closing. This is best for major issues that must be resolved before you take ownership or when the seller hasn't vacated. You will need to negotiate a new closing date and sign an amendment to the contract. Once the seller resolves the issue, conduct another walkthrough and then close once the issue has been confirmed to be resolved. Now doing this, it may affect your rate lock, so talk to your lender first. It may affect your moving plans and requires a seller's agreement in this plan as well. One more option. You can cancel the contract. Okay, this is best for major undisclosed damages. If there's a seller breach of contract or there's issues that make the property uninhabitable or not as agreed. Now you'll have to notify the seller that you're canceling due to a breach of contract. You need to work with your agent and attorney. And then you might be able to get your earnest money back, but walking away from the deal, you run a bunch of different issues with that. This is like the nuclear option. Use it only if the issue is severe. Now, don't close without resolution. If there's a significant issue, do not close until it's addressed or you have a credit or holdback in place. Don't agree to verbal promises. If it's not in writing, it never happened. The "I'll come back next week and fix it" means nothing. Get it in writing. But don't be unreasonable either. A missing light bulb is not worth canceling the deal over. Pick your battles. The bottom line is this. The final walkthrough, that's designed for you. It is your protection. Document everything. Report issues immediately. And don't close until you have a resolution that you're comfortable with. Now, we've talked about a lot of stuff. So let's kind of recap. We've talked about financing finalization phases, right? Here's what you've learned about the final loan processing. We've talked about submitting final loan documents and why responding quickly matters. We've talked about the underwriting process and what underwriters are looking for and how to stay flexible with last-minute document requests. We've gone over common underwriting conditions and how to satisfy them effectively and efficiently. And we've also talked about what can kill your loan at the last minute. Now you've learned about what a rate lock is and how it works, when to lock your rate and when to float your rate, and how long the lock should be and why the buffer time matters. We've talked about the float down options and when they make sense. We've talked about what happens if rates change after you lock. We just finished talking about what to check during your final walkthrough, right? We're looking for condition, repairs, systems, included items, and how to ensure everything that should stay has stayed and everything that should be gone is gone. We've talked about what to do if you discover problems 24 to 48 hours before closing. We've talked about your options, repairs, credits, holdbacks, price reductions, delays, or canceling. We've also talked about how to document your issues and work with your agent to resolve them. The final financing finalization phase is where your attention to detail matters the most. One missed document, one late response, one new credit inquiry, or one problem discovered during the final walkthrough can delay your closing or even kill your deal. Buyers who succeed in this phase respond to the lender request within 24 hours. Don't make any financial changes. Lock your rate at the right time and conduct a thorough final walkthrough to address issues before closing. Now, here are the type of buyers who struggle. They're the ones that go silent when the lender requests documents. They're the one that finances a car or opens a credit card. They're the ones that rush through the final walkthrough. They're the ones that ignore and hope that they'll be fine after closing. Don't let that be you. Now, if this video helped you, hit that like and subscribe button. We're almost at the finish line. The next video is all about closing day and what happens at the closing table, what documents you'll sign, how much money you'll need to bring, and what to expect and how to walk away with the keys to your new home. So, drop a comment and let me know. Are you in the financing finalization phase right now, or are you just in the home searching process? Where are you at right now? And what has been the most stressful part of that? What surprised you? I read every comment and I'm here to help. I want to thank you for watching, and remember, you're so close to the finish line right now. Stay focused, respond quickly to your lender, don't make any financial changes, and conduct a proper final walkthrough. You've got this. I'll see you at the closing.